Since the end of 2022, AI has lit a fire under the stock market, kicking off one of the most incredible rallies we've seen in a long, long time. But with these sky-high prices, there's this one question that just won't go away. Is this for real, or are we all watching a massive bubble that's about to pop? Well, today, we're going to do a little financial investigating to see what the evidence actually says.
So this right here is the central mystery we're trying to solve. We're going to look at this case from a few different angles, checking out what different experts have found to see if we can piece together a verdict. And believe me, the stakes are huge, not just for investors, but for the whole economy.
And this chart, wow, this really shows you what all the fuss is about. I mean, just look at NVIDIA. From December 2022 to June 2024, its stock just exploded, up over 570%. It makes the Nasdaq's already amazing growth look tiny by comparison. And a chart that goes almost straight up like that, that's exactly what gets people whispering the word bubble.
Okay, so how do you actually prove a bubble is a bubble? You can't just point at a crazy chart and call it a day. No, financial detectives have a whole toolkit to help them separate real, healthy growth from just, speculative mania. So let's take a look at the gear our experts are using.
First things first, we've got to be on the same page about what we're even looking for. A speculative bubble is what happens when a stock's price completely detaches from reality. The hype, the story, the fear of missing out, it all just pushes the price way, way beyond what the company's actual performance says it should be worth.
So here's how the pros do it. It's basically a two-step process. First, you spot that disconnect, that gap between the price and its real value. But that's just a hunch. To be sure, you have to bring in the heavy machinery. These are powerful statistical tests that can tell you, mathematically, if the price growth is truly explosive and not just some normal market swing.
And the main tool in our kit is the Generalized Supremum Augmented Dickey-Fuller test. Yeah, I know, it's a mouthful. Let's just call it the GSADF test. Think of it like a super sophisticated bubble detector. It scans a stock's entire history looking for those specific telltale signs of explosive growth that just are not normal. All right, we've got our tools. Let's open up our first case file. Now, this first piece of evidence comes from a major university study, and its conclusion is, well, it's pretty shocking. It suggests this thing isn't just about one or two stocks, it's everywhere.
So let's call our first expert witnesses to the stand, a team of economists from Yale and Macquarie University. They published a paper in 2025 where they used that very same GSADF test to sweep the market for any signs of a bubble during this whole AI boom.
And what they found is just staggering. I mean, look at this. Their test didn't just flag one or two companies. It detected speculative bubbles in all 7 of the Magnificent 7 stocks. Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, Tesla, all of them. According to this test, the whole group was caught up in some serious irrational exuberance.
And when they dug a little deeper, they found some really interesting details. For instance, NVIDIA and Microsoft had the longest-running bubbles, but NVIDIA and Tesla, they had the fastest, most explosive growth. And get this, for 6 of the 7, these bubbles were still going strong right into 2025. This paints a picture of a really broad, really persistent market frenzy.
Okay, on to our next case file. Now, our second team of investigators took a totally different approach, a really clever one. Instead of just crunching the recent numbers, they went looking for ghosts, echoes from a past bubble. I love this. Researchers from the Norwegian School of Economics basically took an AI and trained it on a past crime, the dot-com bubble. They fed a machine learning model tons of financial data from that era, essentially teaching it to recognize what a bubble looks and feels like. Then, they unleashed it on today's AI stocks to see if it recognized any of the same patterns.
But here's the twist. Their AI didn't scream bubble. Instead, its findings were, well, a lot more cautious. It found what they called signs of speculative tendencies. But the researchers were very clear, saying this should be seen as a sign of caution rather than a conclusion. So this adds a really interesting layer of doubt to our investigation.
And that brings us to our third and final case file. And this one introduces a brand new piece of evidence that completely changes the game. It suggests the frenzy isn't widespread at all. It's actually intensely focused. So our final expert witness comes from another 2025 paper, and they argue that just having explosive price growth isn't enough to call it a bubble. They say a true speculative bubble also needs something else, a big shift into a state of high volatility, crazy, unpredictable price swings. So they came up with a much stricter two-part test. First, they use the same GSADF bubble detector we've already talked about, but then they add a second filter, another tool that acts like a volatility detector. And here's the key. In their book, a stock is only in a real bubble if it sets off both alarms, explosive price growth and that shift into high volatility. And this is the bombshell. When you apply this tougher two-factor test, the whole picture just flips. Look at this table. Sure, almost all of the stocks had explosive prices, but only 2 of them also triggered the high volatility alarm, NVIDIA and Tesla. So by this stricter definition, the bubble isn't widespread at all. It's highly concentrated in just those 2 names.
Whew! Okay. We've heard from all the experts, we've seen the evidence from 3 completely different investigations, so what's the final verdict? Is this AI stock boom a bubble or is it not?
So what's the big takeaway here? I think is that there is no easy answer. We've just walked through 3 totally credible expert analyses, and each one came to a different conclusion. And that proves just how incredibly hard it is to identify a bubble while you're in it. The verdict really does depend on which tools the detective decides to use.
Let's just quickly recap the whole case. The Yale team used the standard bubble detector, and their verdict was a widespread bubble across all of the Magnificent Seven. Then the Norwegian team used their historical AI profiler and came back with a more cautious warning. And finally, the SSRN team, with their two-factor test, concluded it's a highly concentrated bubble in just NVIDIA and Tesla. 3 studies, 3 different verdicts.
So where does that leave us? Well, it's pretty clear this isn't a simple yes or no situation. The AI boom isn't just one thing. All the evidence points to it being a really complex mix. On one hand, you have totally rational, justified growth based on a technology that's changing the world. But on the other hand, you definitely have these pockets of intense, maybe even irrational speculation.
So maybe, just maybe, we've been asking the wrong question all along. Instead of just, is it a bubble, the more important question might be this. Is this a story of widespread irrational mania like we've seen in the past? Or is this the story of the market rationally, even if it's aggressively, trying to price in a true technological revolution, where most of that value ends up concentrated in just a handful of winners? The answer to that question is what's going to define the next decade.